S.L. Bansal, Chairman and Managing Director for Oriental Bank of Commerce, joins us, and in a few minutes, Arundhati Bhattacharya, the Chairman of State Bank of India, will also be joining us. Mr. Bansal, good morning. Thank you very much for joining us, and that is the first question, actually. Who will buy the 7-year bonds? They are uninsured, they are unsecured. Indian savers are used to, at the most, 5-year FDs, and they are used to tax-free 10-year bonds. Will there be a market for the 7-year bonds?
I think we'll create market for that. In any case, public have a lot of faith in the banking industry, and that's why we are confident that we'll be able to raise money in these type of bonds.
What is your sense the cost might be? Would it be a spread of a spread over your current 5-year FD? Today, if you have to issue a 7-year, approximately where do you think it will be priced?
I think something like 50 basis point higher, maybe around 9.5, because we are offering 9.
50 bips higher than Government of India paper? 50 bips higher than Government of India paper or your FD?
No, see, our FD rate is 8.75 as on date for 5-year and above.
Okay.
And Government of India paper is something like 8.70, 8.80. So I believe it at 9.25 or 9.5, something like that, rate will be quite attractive for the public, and they will be in a position to mobilize sufficient money. And as the time progresses, there will be large number of takers for this type of instruments.
Mr. Bansal, good morning. So if you can tell us about how much your cost of funds will fall, not just overall, but also how much it could fall, you know, both for housing as well as for infrastructure?
See, the guidelines are very clear. Whatever money you are raising and lending to infrastructure, it will not be subject to CRR, so 4%. Now, suppose I am raising money at, say, for calculation purpose at 9.5, then 4% on 9.5 translates something like 38 bips. And then overall 22.5% SLR cost, which is 22.5%. Now, suppose I am earning 8.70 on the bonds, and my lending rates are close to 11.50, the difference of that on 22.5%.
Yes.
Plus, lot of benefit will be there on priority sector lending. See, today environment, it involves a lot of cost. People are not understanding. I think a lot of tweaking has been done in the priority sector definition in this fashion. And the requirement of the priority sector lending, so what, and then accordingly agriculture lending will come down. And the banks will be benefited a lot.
Okay. Well, Mrs. Bhattacharya has also joined us now. Good morning, Mrs. Bhattacharya. Thank you very much for joining us. Can you tell us what you see as advantages for your bank first up?
There are quite a bit of advantages in view of the fact that it's not only the amount of advances we do in infrastructure and the core industry projects and in the affordable housing space going forward, but also, you know, certain percentage of our portfolio as on yesterday's date, that also is available for us to raise these bonds. Of course, I think Mr. Bansal was just now commenting on what would be the advantages for the banks, and I subscribe to the same. First of all, there is no CRR, SLR requirement. Second of all, whatever you raise over there will not be treated as part of ANBC, the number on which we have to do our priority sector lending. So to that extent, you know, it will give us a little more comfort, and we'll be able to utilize the funds over there in a more profitable manner. Having said that, what it also does on the asset side is, it at long last allows us to match the loan with the productive life of the asset, instead of having to scrunch the repayment in a much smaller space of time. As RBI has said in its circular, you know, that if you scrunch the repayment, it results in stress, it results in higher user fees. It doesn't allow the promoters to take out enough equity for the next project so that they start leveraging more. So all of these things will get rectified. And not only that, you know, I think with this, we will also be able to price our risk better. And why I'm saying that is, currently, because the repayment requirements were so high, we were not really able to do much of a differential pricing for the project period, that is the project implementation period and the subsequent period. But now when your requirement for repayment of the principal is not going to be so high, you will definitely be able to get a little higher interest for the project implementations period. So even risk pricing will become much better. So overall, I think it's a very good thing. Okay. The other thing also, if you look at a bond market, you know, our bond market has not really attracted depositors or bond buyers. I hope, you know, with the banks becoming more active in the bond space, even more depth and liquidity in the bond market might come.
That was going to be my question to you, and I had already asked Mr. Bansal that. Who will buy these 7-year bonds? You know, the Indian retail investor has not had this experience. It is still an unexplored market. You know, for 7 years, there is no early redemption, unsecured, uninsured. You see so much appetite.
See, it will happen over a period of time. I'm not saying that it's going to happen tomorrow, but definitely I believe that over a period of time this will happen. And the reason is, as I said again, you know, investors and savers, they want different types of instruments. The bond market has never been very liquid, nor has it been very well understood. So those were some of the challenges in the bond market. But Indian savers, basically, they have a lot of faith on bankers. They have been putting all their deposits into banks, and really speaking, how many of them put it in because there is an insurance, and the insurance is also limited. It's not beyond a particular number. So to that extent, I don't really believe that there will be no takers. In fact, I'm sure that Indian investors will also like to have some kind of exposure in these sort of instruments.
So, Ms. Bhattacharya, if you could just tell us how much could this reduce the cost of funds for the bank itself, and also how much could the cost of loans specifically for the housing sector come down?
See, exact numbers I still won't be able to tell you. I think, you know, it would be something between 35 to say around 45 basis points that we are seeing currently. But again, I have to really get down to the numbers and work out how much it should be. And how much of that will immediately come about, so that, you know, whether we can think about doing something. Yes.
You're saying you will be able to lend at 35-40 basis points cheaper to the infra housing finance borrowers?
No, what I'm saying is, no, that's not what I'm saying. What I'm saying is that when you have these bonds, how much is it going to actually impact, you know, if you consider a regular deposit raising and from that you make the loan, and if you do it through these bonds. So the difference between the two will be somewhere in the range of 35 to 45 basis points. Now, once I have got that, then how do I and what do I price my product? How do I do it accordingly? That is a call that still has to be taken. But definitely it's going to reduce our cost of funding to in the range of 35 to 45 basis points.
Mr. Bansal, getting you in on this point, will you be able to undercut a PFC or an REC now because you have this advantage of cheaper money?
See, we don't have intention to cut anybody, but the point is, as Madam was mentioning, a lot of stress will ease in the infrastructure sector. Now, as on date, we are lending end-to-end from 12-year to 15 years period, out of which 4-year goes for the construction period, and the remaining repayment period need to be balanced within 10 to 11 years. It is unfair to the consumer, ultimately developer or the contractor. Now, since we will be having, suppose the concession period is 25 years and the RBI expects us to amortize our loan in 20-year period, say 80% of 25 years, which comes to 20 years. Now, 15-year or 12-year period becoming 20 years itself will give lot of relief to the ultimate entrepreneur and naturally to the bankers. So, and Arundhati Bhattacharya was right when she mentioned that we will be in a position to price our loan properly, because after every 5 years these loans will come up for sale or repricing, whatever it may be. Although if somebody else is not taking, I can again take it on my books. So a lot of stress will come down. That will be one major advantage. As far as pricing is concerned, see, home loan borrower is not going to benefit immediately, because we are offering all home loans closer to our base rate. And the 10.25, 10.20, whatever with the base rate of the different banks, we are offering home loan. But of course, all these developers will get some concession which is close to 75 bips to 100 bips, because we need not go for priority sector lending to that extent and then invite problems on our balance sheets. Let us now understand one thing, we need to be professional because all criticism we are facing now.
Okay, Mrs. Bhattacharya, will you be able to better price the loans, because now you can lend actually for 25 years. When you take the real arithmetic, at the moment even a 30-year concession or a 25-year concession is given as a 10-year loan. So you try to perhaps for a road, work in an 8% growth of traffic. Now you think you can be more realistic because you appraise it as a 30-year project, even if you give initially only a 5 or 7-year loan. So is it likely to be more realistic? Should we, can we assume that in future infra loan stress will decline for banks?
Absolutely. I think that's precisely what it is and what we have been requesting the regulator to consider, which they have very kindly done. And this is precisely what we have been saying, that you cannot possibly have a 30-year asset, whether it be a road project or it be an oil refinery. You cannot have this kind of an asset that's built for a long period of time being repaid over 7.5 years. It causes enormous stress in the system, and I don't think anywhere in the world it is done in this manner. So I think it was definitely a step in the right direction. It will help India's infrastructure growth.
Well, okay, now for some immediate questions to both of you very quickly. What is the impact on your P&L this year itself? You can get 16% of your historical loans into this exemption from CRR, SLR categories. So, Mrs. Bhattacharya, first, how much of a P&L impact can you have this year itself, either in NIMs or in any other heading?
I think, you have to wait for a little while for us to actually work out the numbers. And also, at this point of time, I may not really be interested in immediately raising funds. Because as you know, while deposit growth is still there, the pickup on the credit side has not yet shown any big, uptick. So we have to see when we raise these funds. And only when we raise these funds and start making the loans, it will have a P&L impact. And that is not going to be immediate. I still believe that we need another 2 quarters before we see the credit requirement going up. So we have to wait a little. Right. Probably the impacts will be felt much more in the next financial year numbers than in this year.
Okay, then we'll have to wait till we chat with you the next time to give us the impact. But one final question from our end then, Ms. Bhattacharya. When we spoke with the Finance Secretary a couple of days ago, he said that a schedule is being worked out for the listing of the insurance subsidiaries of various banks. And, we've been hearing names like SBI, ICICI Bank, etc. Will SBI be looking to list SBI Life soon? And if yes, what are the ballpark valuations that one could look at?
See, at this point of time, we are still in discussions with our JV partner. As you know, we have a JV, and the JV partner also needs to be on board. So I won't be able to give you the exact numbers or, what are our plans. Because first of all, they need to determine whether they would like to bring it up to 49%. And only thereafter, we will think about the next step. So again, probably the next time I talk to you all, I'll have better details on this.
But since the banking secretary repeatedly said sale of assets for all banks actually, do you think this listing or sale happens this year, this fiscal?
It could. I'm not ruling that out. It definitely could. But again, I don't really want to give you any timelines or the numbers. As I said, my partners need to be on board before I do that.
Some analysts were suggesting that the valuations could be, to the tune of, could stretch all the way to about 20,000 crores as well. Is that too far an assumption, or that could be something realistic?
It's quite realistic.
Okay. Is it underestimated?
It's not too far.
Okay. All right. We'll have to leave it at that. We won't be out of time as well. Mr. Bansal, Mrs. Bhattacharya, thank you very much for joining us and putting this rather complex set of rules from the Reserve Bank into perspective.